open or 600 seconds of trading, which is the name of the presentation. What we're gonna do in the next 600 seconds is to provide you guys with a quick overview of the markets, talk a little bit of what's going on. But before we start, as always, I need to stress that financial markets, unfortunately, is risky, and this is a risk that we'll lose all of our invested money. As well, I'm going to share with you guys what I think is happening in the markets, and I will conduct live technical analysis, telling you where I think people will be buying and where people will be selling. But this is not constructed as trading advice. Instead, it's just my opinion. So bear that in mind. If you want to interact, you just use the chat box here. It's very straightforward. You need to be logged in on to YouTube, and being on YouTube is quite good. It allows you to subscribe to videos like this one here, and you get a notification when I'm live. You can also click on the like button, so please do that if you are watching this right now and you like the presentation. Okay, let's begin, and we'll begin with the euro as we usually do. So this is the euro, and a few days ago I told you guys that I think traders are going to sell at 118.15, right? In fact, I've been bearish since the price took out support at 119, 121.50. You might remember that I said market is trading sideways. We're getting into trouble because they tried to buy some dips. And then I said, you know what, let's give this market up. And then when we took out support, we can potentially trade down to 17, I think 17.20, I think I said. Well, the market went as low as 16.71. And a few days ago, I said, look to sell at 18.15. What I'm saying today is that, most likely this market will continue to trade to the downside. And down here is a good opportunity to book a profit unless you want to keep it for the next support level, which is the 1650 level. Now, going forward, traders that are not short, the first thing they're going to do is they're probably going to take a Fibonacci from that high to this low, and then they're going to try to see where to sell. So some people sell at the first Fibonacci level. I like to sell at the 50%. And I analyze a lot of markets, so I just wait until which market pulls back to the 50% correction. So that's what I'm looking for today. For a 50% correction, more or less, that is the 1752 level. So here I suspect traders are going to look into sell. And where are they going to put their stop loss orders? Well, the price is creating lower and lower highs. So most likely they're going to put it up here because that's the last high. This is the last major high or last high for this downtrend. If we take this level out, the market could push to the upside, maybe to 1913, 1923. So selling here gives us a risk of about 87 pip. And if we go back to support in a day or two, we make 99. That's very important. That's a good risk reward ratio. It's not an amazing risk reward ratio, but it's at least get back what we're risking. So I'm bearish from this level. Uh, this is the pound. We're not supposed to cover it actually, but let's do it anyway. So the pound, as you might remember, a few days ago, in fact, the market trading sideways, and I said take out 34.50. We're probably gonna head to the downside, and surely we did move lower. Decline with about 150 pip. It moved down and up, and we did the webinar, and we're trading pretty much here when we looked at it. The market moved down with about 153 pip. Here as well, you're dealing with a nice downtrend. Let's just focus on that. Let's not be a hero, and well, actually, let's not be stupid. Let's be honest. A lot of people are stupid, and they just buy things that decline when they should be doing the opposite. That is how the financial markets works most of the time. Not all the time, but most of the time. Something goes down, it keeps on going down. Something goes up, it keeps on going up. So here, if it goes up, I think around 34, traders are probably going to sell. Stop loss orders goes to about 35.17, so just about the high. So this gives us a 117 pip risk. Go down to the December 15 low, make 95 pip. So pretty much a balanced risk reward. And then go all the way down, make 181. Now, the reason why I sort of say sometimes people are stupid, or I just said it, is all these crypto traders. I don't know what's going on with them. The market turned bearish here at 56.63. and it's going down and up, down and up and down. So since then we're in a downtrend. There's no point pulling a Elliott wave, fancy Gann lines or whatever you're doing. Of course, there are people that do Gann lines and do that very good. I'm not going to discredit everybody that does it, but there are some basic strategies that you can show have been working for quite some time. I'm not just talking about today or last decade or the last 100 years. Trend following has been working for literally 300 to 400 years. There's a good book, used to mention this quite a lot a few years ago. It's called Devil Take the Hindmost, like that. This book is not a book about um, trading, but it's a book about financial speculation. Now, these guys, if you look here at table of contents, like when you read this book, and they cover episodes here, like 1690s, 1820s, 1945, 1929, the 80s, in the US, the 80s and the 90s, they're all sort of, if you read this, you understand that there's bubbles across all of these different episodes. You had amazing moves to the upside and strong declines to the downside. And this is uh, just the nature of, and this sort of described trends. So when I read this book, I think I read it the first time in 2000 and maybe 2010 or something like that, or maybe 2009. Uh, it sort of struck to me like, wow, you had trends working back then. So it's been working for at least 300 years. Uh, why would they not be working for another, say, 100 years? And yeah, they have. So Bitcoin is bearish. It went up a lot. It's going down a lot. Technically, the trend is bearish. Putting on a fancy Elliott wave here structure is not going to help you, most likely. This is in a downtrend. I'm not saying we should sell it outright. You might remember we said sell here for it to go down, and it is definitely going down. But obviously, every time you sell, you need to look at the risk reward ratio. So the market could potentially decline to 6,800 or so. You have the March low at 64.11, and if we sell right now, we're gonna potentially make maybe $900. At the same time, we're gonna risk 1,000. So it doesn't make any sense to trade this setup unless, of course, you project that the market is gonna trade much lower than the March low. You might be right about that, but if you have some people do that, but I try to kind of stick to the short term because that's sort of what is easier to understand. Now here, if the market bounces up, so it goes back below the April 17th low, most likely people that bought here and probably gonna try to get out. And then you have better traders, so they're probably gonna sell, so they sell and have 736 pip risk. And then if they target the low, they make 452. And if we go all the way down, they make maybe 1,000. So that is what I think they're looking for. Of course, if they're looking for even deeper declines, then $1,500 by risking about 700. So that's a good risk reward ratio. That's something better than just looking to buy here. And keep an eye on Monero. Monero right now is very close to take out its April high. And this could set the stage for declines in other cryptos as well. Because take out the 159 level, then yes, the next sort of interesting lows or interesting levels are down here. That's a $52 decline or a 33% risk. And so we take out that level. If you flip on the 4 hour, you're probably going to see that this is a level you can potentially work with, and probably stop loss orders just goes above here. Okay. Uh, Not that I want to short Monero or short any cryptos outright. But I think we take this level out and people gonna be start to get stressed because if Monero goes down, then what's gonna stop many of the other top coins to also take out their major support levels? So to summarize, I'm bearish Bitcoin, and I think if we bounce up a bit, maybe April 17th low here from May 18, I think traders are gonna sell for another decline. Here's crude, and crude is another example of how just following the trend. This makes perfect sense. And follow the trend until proven otherwise. That's sort of what we need to do because these markets can continue to trend for much longer than you and me have capital or even can anticipate. I mean, it's very difficult, but most trends just continues to going on and on. And I think even the most optimistic persons, well, not of course the most optimistic, but the majority of people are getting surprised. Even someone like myself, they've been trading for well since 2006. Anyway, uh, the idea here a few days ago in May 15, May 16 was to take out the high. This goes up to the November 14th low, and I'm still sticking with that view. The market went down, and as long as trade above 70.63, then there's no real reason to change the bias. This situation reminds me a lot of here. You might remember we said look to buy, and we could be bought one, two, I think three, four times. And I think on the fourth time here we did get actually stopped out, but we had all these pushes, and then we had that corrective move. So it sort of reminds me a lot about this. Not sure if it's gonna work out, but it's better to be bullish rather than short at these levels. As long as trade above 70.63. Again, there's some people that are very good at shorting highs and markets like that. And if you have a gift for it, do it. If you don't have a gift for it, just stick with the trend. Here's gold. Gold is bearish and correcting up to the lower support levels. And I suspect here that if we go up here, traders are probably going to sell. It is extremely difficult for a market to try to retake sort of something like this. You see it down, up, down. So it sort of bounced from these levels, and this level was important for a very, very long time. So I think, in essence, anybody that started to buy in February up until um, yeah, May, not not everybody's still long, of course. Some people took losses, but probably there's small people here that are still long. And when we squeeze to the upside, they're gonna say, "Oh wow, I can get out for a smaller loss," and then they sell. At the same time, traders are just looking at this and they say, "Well, the last major high is up here, so with price trading below this level, then I want to be bearish." And again, of course, you use your technical analysis and error size, divergence, whatnot, and you could potentially, you know, have bought at these levels. And some people did buy at these levels, and they made a lot of money on these moves. But again, if you're struggling with being profitable, you don't have the gift for it, then you stick with the trend. That's what I do. Here's the German DAX. German DAX declined quite a bit, um, probably because of the situation in Italy, just uncertainty. But at the end of the day, the market had a very good, nice run, and this is sort of the first sell-off for quite some time. My idea was to buy here for it to go up. It did go up, and at one point we made back our risk. The market moved back down to support, and obviously trade below the trend defining level, and then we'll be in trouble. But again, let's just stick with the trend until proven otherwise. Okay, guys, we're gonna wrap things up. I don't have any questions or comments. If you like the video, don't forget to click on it and press like as well. I do have a webinar coming up. Should be Tuesday next week. So we have a bank holiday, by the way, on Monday in the US and in the UK. I think it's Memorial Day in the US and Spring Bank Holiday in the UK. So on Monday, there's no webinar, uh, but on Tuesday there is. And on Tuesday at 6 p.m., I'm gonna do a presentation about Bitcoin trading and blockchain. Similar to what we did last time, and I think we had like 500 people watching that presentation. And if you want to know more about blockchain, which is what underpins something like Bitcoin, and something that more and more people are investing in, then come and join me. It's very straightforward. I'll try to break it down, so make it very, very simple. There's a lot of people like IBM, to give you an example, that they set up special teams that just deals with blockchain because the concept itself is really good. And even Amina Capital just hired a guy, I think he's from ex-Goldman Sachs, to run a special unit that manages people that want to work with blockchain. So if you want to learn more about blockchain and of course about cryptocurrency trading, then it's free to join. Click on education and webinars. We do have other webinars as well later in the month. I think the same week. Yeah, literally the day afterwards. I have an introduction to hedge fund trading with Nathan Batchelor. Okay, guys, thanks for joining me. Don't forget to like the button. Don't forget to check out the section here as well for more technical analysis. Thanks.